Yeah, I'm just gonna get started now, man. So, what's going on, guys? Welcome to another edition of Crypto World Radio. My name is Wabi, and welcome to a new segment that I'm going to be hosting on here on a weekly basis. The Arbitrum Dev Spaces. Every week, we're going to have someone that's building on Arbitrum, and we're going to host them here on these spaces. I'm here joined today by Payne and Dow. Thank you, Dow, for coming on onto our roundtable. Always love having you here, brother. And we're here joined by Tenzin, who's a biz dev over at CeeLo Finance. And then look forward to seeing Tenzin more on these Arbitrum type spaces. Eventually, my show is eventually going to be having a multitude of devs that are building on Arbitrum and Optimism as well. So look forward to those things. And with that being said, I guess let's just have a general chat, see how everyone's doing. Dow, how are you doing today, my man? Good to have you on.
Hey man, thanks for having me. Doing great, in spite of the crazy market downturn. But you focus on the fundamentals. There's some good stuff going on, and among those things, Arbitrum and project like Silo Finance, I think, are really exciting. So, looking forward to have this space and then have this real cool conversation.
Yeah, man. Yeah,
Appreciate it, man.
I noticed that like this current market cycle, like the bearish market cycle is very similar to the 2015 one, where even though we had some upside liquidity action, there was an event in 2016 with Bitfinex, where a lot of BTC ended up being confiscated, and like those user deposits eventually, like they were made whole with some. They were made whole with, I believe, the Leo token, and you're able to redeem that for the BTC that like the missing portion of it. And now we have this Silvergate situation, and potentially some other entities, such as I think it's First Republic Bank and Signature Bank, but I know that's more of like the TradFi stuff. So you can kind of say what happened in the crypto market last year is now gonna happen in the TradFi market, right? But it's good to see that we can come together and have these general discussions overall, man. Gotta hold it down. Payne, how are you today, my man? What's going on, brother?
Pretty good, man. Yeah, nothing crazy. How about yourself?
I'm chilling, man. Yeah, I'm chilling, bro. Good to have some of the guys from Arbitrum come on in and talk some shop. So without further ado, Tenzin, what's going on, my man? How are you feeling today?
Hey guys, feeling all right. Obviously we've got kind of this huge scenario unfolding literally in front of our own eyes, but we're kind of just strategically moving stuff around and just preparing ourselves for the worst just in case. But it doesn't look. I mean, people are always blowing it out of proportion on Twitter. I doubt that Silvergate Bank was one of the main banking partners for USDC as compared to something like BNY and Signature. So I think
Yeah, the
it will come out
BNY
more positive than people think.
BNY actually holds the majority of like Circle's transaction with USDC. So like if they wanted that yield, they'd be in treasuries, and like if 20% of that is in Silvergate Bank, and the haircut on as SVB is 92%, then the backing of the actual USDC is cut by about 182 million, and that's easily absorbed by the balance sheet that things like Coinbase and their parties have on their sheet. And on top of that, like usually with USDC FUD, it's kind of like the culmination of everything that could go wrong. But if you just print more with rates where they are right now, currently, so it's like you have like traders turning into journalists, and sometimes it could be a self-fulfilling prophecy. But I mean, this is nothing more than just like the end
Yeah,
of a growth cycle. There's always some crazy stuff that happens towards the end. And I ultimately believe that like second half of 2023 is gonna, things are gonna start looking um, a lot better, really. And you know, I'm just glad that USDC and Tether they're doing just fine. And ultimately, this just proves why Bitcoin has a use case whenever these banking situations happen.
No, yeah, I agree that this is what it was built to protect us from almost. But it's kind of ironic, and I hope this is kind of also a wake up call to the community that we have inherently made our system centralized by becoming reliant on something like USDC and USDT, where we have actually seen some solutions that are more decentralized and well completely decentralized. If you look at something like LUSD, um, obviously there's the case of being able to pair with different assets. So like LUSD is paired with USDC and USDT, but LUSD can be redeemed for $1 worth of ETH with enough time in the stability pool. So technically, it's kind of a perfect stable coin in that sense, and I think that's more of what we want. So hopefully, we'll have more builders kind of going into that space after this whole debacle.
I hope so, man, because this isn't really the first time that a bank actually goes under as crypto starts developing. Back in 2013 or 2014, that situation with Cyprus happened, where the government actually like took out money from accounts or even just shut them outright. And more recently, earlier this year, I had a good buddy of mine say that like Wells Fargo just closed his account, and it took them weeks to send him a cashier's check. And this individual
No,
for years and years, and that's just unacceptable, man. Because there are some people that are exposed to having a lot of their assets in a bank account. Not everybody has the freedom to invest in luxury assets, and cryptocurrency is by definition a luxury asset. And it is higher up on like the risk curve and growth and all those things. So you have like single mothers, single fathers, people that are living paycheck to paycheck, really dependent on their bank accounts. And so you know it's just unfortunate that like now it's Wells Fargo that's running into situations. And ultimately, does this resolve in like a decentralized sort of bank? I would say yes and no, because like currently right now, I believe that the biggest issue that we're facing within like governance proposals and all those things are like whales, right? They're the ones that have like majority way in quorums and things like that, whether something passes or not. So I think like that's a current issue right now. But I feel like crypto has a framework to fulfill the bank the unbanked prophecy, right? So I wanted to know a little bit of like how did you come across the digital asset space, and what brought you into eventually coming on as a builder into the Ethereum ecosystem?
yeah. So I mean, I was always really fascinated by the whole space, and I kind of looked in from as an outsider. But somewhere around 2017, and it's actually funny you mentioned having a bank account closed, because this happened to me because of the way that I initially got into crypto. But I was actually doing 2017. I was doing peer-to-peer Bitcoin selling, right? So I would get a small commission, and then I'd just essentially middleman Bitcoin in between people through peer-to-peer services. And Bank of America did not like that. But yeah, I was doing that for a while. Then I took kind of a break, and I really came back more towards the DeFi saga when that started, because it just drew me in a lot more. That was just something of great interest to me. And yeah, I started contributing certainly in like a bunch of different DAOs and Paraswap, Bancor, AP Wine, and Silo Finance. And I did some work for a small fund, and eventually I graduated from DAO contributor to a full-time BD, and I've been at Silo Finance ever since.
Awesome, man. So I guess I'll start off with some basic questions, man. So what's the difference between Silo and something like Aave or a compound?
Yeah, so Silo Finance, we're a risk isolating lending platform, and what that means is that with traditional DeFi lending protocols like Aave and Compound, what they do is essentially they have one big smart contract, and all of the assets are placed inside of this big smart contract, and they're all allowed to borrow each other. So you can deposit ETH, and you can borrow wrap BTC, or you can borrow USDC, and so on and so on. And what this kind of creates is that now you have this dependency, right? This risk that comes along that if you list a bad asset into this huge pool, if there is a malicious asset and if someone can mint 1 billion of them, right, they can just deposit and borrow out all of the money. So that means that basically Aave Compound, they can do really, really well with the large caps and the mid caps even to a certain extent, but they can't get away from this shared risk. So they are unable to service smaller markets. And so the idea of Silo Finance was to create markets for all assets in a permissionless and decentralized way. So what we do is instead of creating one big pool, we create one individual pool for every single asset, and we pair them with ETH and a stable coin. On Arbitrum, we use USDC, and on Ethereum mainnet, we use our own stable coin. And what that does is users are still able to cross lend because they're able to, deposit X token, borrow ETH, deposit that ETH in a separate market, and then borrow out, Y token. And so you still have this ability to go from one asset to another, but you don't share any of the risk. And it also allows us to list an infinite amount of markets for an infinite amount of tokens without any contagion, which means that we can service all the long tail, complex derivatives, LP tokens, things like that.
And so with risk isolated, is that similar to like when I go on a Bybit or on any other like derivative exchange where I just go like isolated margin or cross margin? How exactly does that work?
Yes, on the back end of those engines, it probably looks. Those platforms probably look a lot more like a shared model. I would compare it more like to Uniswap versus a balancer pool. So if you're familiar with balancer, right? There's 80-20 pools, and you can add as many assets as you want. Whereas in Uniswap, you have these two-sided pools. So in Silo, we have these Uniswap-like pools where it's just one asset and then two bridge assets, what we call the ETH and the USDC. And you can think of Aave like a huge balancer pool with all of the assets making up a percentage of the pool. If one of the assets is bad inside of a Uniswap pool, you can imagine what that causes to the entirety of the pool in something like a huge balancer pool.
And speaking of assets, what sort of things can Silo accept as collateral?
Yeah, so we have a really strong focus on native tokens. We work with basically all of the Arbitrum ecosystems, and we've only very recently launched, but we've already launched markets for things like DopeX, GNS, RDPX, basically all the markets that would seem impossible for others. And then we are also starting to move into a different space, which is the LP token space. So we're going to be able to list Curve LP tokens, where you can earn the full extent of your curve and convex rewards while still borrowing against it and even leveraging, right? Which is something people really like to do. And this is something else that we're focusing on is complex derivatives. So if you look at things like JGLP, JUSDC, Plutus GLP, things like of that nature, we're certainly starting to look into that space. And yeah.
Cool, man. And does Silo run any sort of incentive programs like some of these other protocols do on Ethereum?
Currently, we do not, but actually our incentives are coming live next week. So with that, we're going to start streaming incentives to our ETH, Magic, Dopex, Wrap Staked ETH, and own borrowing and USDC deposits in certain markets. But we're really looking to expand. So if there's any interest to have large deposits or large borrowing happening somewhere, certainly reach out to us. This is going to be our first kind of pilot reward program. So there'll be very good yields, especially initially if you're in there early.
And speaking of lending, are there any sort of risks that it carries?
Yeah, so lending is probably the most complex part of DeFi, just because it has so many dependencies. In lending, the primary two things are the oracle and the liquidity of an asset. So what you can think about is, if someone takes a loan against $100 million worth of Bitcoin and they borrow, $75 million worth of US dollars, there has to be a counterparty to buy those $100 million worth of Bitcoin on the market at least $75 million for you not to end up with a bad debt scenario, right? Because if you end up selling the Bitcoin for less than 75, then the person that took out the loan is essentially taking a profit out on you. That and then wrong price oracle reporting. For that end, you have to just kind of be aware as a user. We use Chainlink feeds right now. We have Uniswap v3 feeds. We have Balancer v2 feeds. And we're working with a few other Oracle providers to kind of enable their services on us. But yeah.
What I find kind of ironic is that a lot of the things that are happening right now are due to like these startup VCs that just gambled away project treasuries, and more recently, like what's going on right now with TradFi banks, right, that were exposed into actual like Ponzi's, right, and super high risk like foreign 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 assets. And when I look at one thing that I really look at is DeFi Llama, and I am not seeing a mass exodus from DeFi right now. Like, sure, like overall TVL is down over the past week, but it's not like a Terra situation or a Umami situation, right, where it's just like a mass exodus occurring. And usually there are some early signs from that. So unless I start seeing a bank run on Aave or specifically Maker, I think like the whole situation about what's going on right now with Silvergate and all those things, I think it just further improves on the use case and the overall narrative for decentralized finance.
Yeah. I really hope that we survive this kind of stablecoin phase that we're going through, the centralized stablecoin phase, and come out better on the other end. But I would say that I'd agree with you, just because prices Bitcoin, it's as low as it's been since 27. Well, it's as low as it was during the 2017 high. But if you actually look at the market cap of stablecoins, it hasn't decreased by much, which means not as much money is leaving the ecosystem as we think. But then again, money is not entering either, and we're just kind of seeing money being shuffled from one place to another, which doesn't indicate growth, but probably indicates something more about the larger ecosystem, not so much the crypto ecosystem as much as the entire world. But yeah, hopefully the economy recovers.
Grant, Payne, if you want to come in, feel free to ask any questions, brother.
Yeah. What was like the main thing that attracted you guys to building on Arbitrum?
Yeah. So actually, we went through and we carefully spoke to a bunch of different L2, well, the primary L2s and the multi-chains, Overall, really, because a lot of them offer you incentives, but Arbitrum was far superior because it has real building happening. If you look at most of the other chains, they're mostly forks, and high TVL forks, but who cares? Even if they have incentives, that's not what we're here for. And Silo was built to support long tail assets. Um, Arbitrum has a ton of those and has a ton of really exciting ones. So yeah, I would say that the uniqueness of all the Arbitrum projects building on top of Arbitrum was what drew us in.
That's awesome. Yeah, I think Arbitrum is really impressive, and L2s are probably going to be a big part of next cycle because, I mean, you can basically just use ETH and you don't have to completely switch to a whole new chain. And, I think fees will still be pretty cheap in a bull run compared to like mainnet ETH. And so I'm pretty bullish on anything being built on Arbitrum and Optimism. And do you think that there'll still be a place for like other new L1s, or do you think it's pretty much going to be dominated by L2s next bull run?
Um, I have a place in my heart for Cosmos and the app chain idea. I think that there are some use cases that you kind of need a custom built blockchain for, but for the most part, especially for DeFi, I see Arbitrum as the hub. Arbitrum is not
I
just the
agree with
place
that
for
100%, man. I agree with that 100%, dude. I think
yeah
Cosmos is good and all, man. Like things built using the Tendermint stack, but as far as like the actual Cosmos ecosystem, I think there's a massive problem going on,
no
specifically
yeah
like with governance and things like that. And um, there's no actual like money within that ecosystem.
Yeah,
yeah
yeah,
and
it's just really small. There's a lot of drama right now, but yeah,
yeah.
continue.
Oh well, I was just gonna say yeah. I mean, I just think like the Arbitrum guys also the people on Arbitrum are very financially like educated, right? Like the people like the Jones guys, like the Dopex guys, the stuff they're doing with options. It's almost like coders shouldn't be building financial tools, but these coders seem to know about financial tools and they have an actual finance team. So it's very very cool to see. But on the governance aspect, that's really important point you brought up. That you have kind of these VCs mostly that are just basically just doing whatever they want with the treasury, um, which is not a good thing. But also, I think that
They're
we
giving
have to
money
think.
away, man. They give a lot of that money away to like
Oh man,
anyone that just builds a proposal and they're just like, "Hey, can you fund my pet project?" And then when that project launches on a chain that like has little to no VL, it's like, "Oh, where's the innovation? Where's the innovation?" It's like, dude, you're giving the little amount that you have to just any random community member. And yeah, I think that's where like L2s come in and make up for a lot of the things that these L1s ultimately failed to do. I mean, if you look at the L1 space, what are the things that have survived? Phantom and AVAX, and now you have Solana, which kind of did this pseudo rebrand to like a BNB chain where it's mostly going to be like gambling applications and maybe NFTs. But outside of that, it's really only Phantom and Avalanche. Um, not much
yeah,
else in the layer one spaces have really survived. Maybe Polkadot, maybe.
yeah, no, yeah, and I think for the most part also. And this is something we're trying to do in the future. I think most DeFi protocols and most honestly just crypto protocols in general should aim to be as less governance as humanly possible, right? Still give utility to the token, but if you're looking at the majority of killer apps that have actually come out, none of them need a token, right? There's a good reason for there not being a token, right? A token does introduce a certain amount of centralization. It gives the users kind of the rights over the entire protocol, and the users can be anyone, right? The users can be the government, the users can be uh, funds. So yeah, I think building in a governance minimized way is the path forward.
Yeah, I agree. I don't think the current DAO model is super great, and I've said that in the past. Like, I think that most of the votes can be very centralized. Like Uniswap, for example, will just like give themselves grants or give their friends grants, or
Oh man,
and
the
like,
Uniswap grant sport is man.
yeah, they
Uh,
just, it's
it,
like, oh, okay, 97% voted yes. Like, it is, or like, especially there was a bunch on Solana, I remember. Um, One was even used during a hack, but what do you think is gonna, like, do you think that's gonna be a thing still, or do you think some other form like Arbitrum is gonna replace that?
um, I don't think Arbitrum is going to like replace that because I think that the governance treasuries are always going to be there, but I think you'll see that the treasuries are going to run out of tokens, and the people that get them are probably not going to vote to inflate the supply. So I think if you want to be misuse your treasury, that's fine. Um, just know that you're not going to have one later on. And we actually do a lot of focus on that. We're running our incentives program obviously soon, but all of our incentives come through DAO earned revenue. So we've actually never inflated it. We've never used any of our treasury. It's all been solely through our LP because we have a stable coin that we incentivize, and then we farm back all of our rewards plus then some. Um, yeah, so it's always been through DAO revenue, and that's been our approach for the most part. We're cash positive. So yeah.
What are your thoughts on things like layer zero technology? I know we were referencing Cosmos, and potentially Polkadot could be referenced as a layer zero, and they have this cool dynamic where they have Kusama is sort of this experimental Polkadot where anything that's going to be launched on Polkadot is first tested out on Kusama and its canary networks, right? So you have things like Moonbeam, it's known as a Moon River,
Mhm.
right? And that's sort of like an experimental version of Moonbeam. What are your thoughts on things of that nature? Do you think we'll see more of those things, or
Um,
do you think like those two examples are kind of like a rare breed? Just because to pull off a layer zero, you need like the best of the best, like absolute giga brains. And if we take a look at what had occurred with UST, right? You had a stable coin that was built on native Cosmos SDK go to zero, but you still had the actual chain, like things built on Tendermint, work perfectly just fine. The chain didn't halt, it didn't lag, transactions were still processed, and that just speaks to the testament of how strong the actual SDK is. And same thing with Polkadot, right? Um, what was that stablecoin? The Akala stablecoin, AUSD,
mhm.
rugged to near zero, and transactions were still pulled off perfectly. And if we take a look at something like Solana, if Solana had a stablecoin and it went to zero, you would have Solana be shut down for like a week. You know what I mean?
Yeah, no, any chain that's pausing as much as Solana, man, it's just going to be impossible to build on it. I mean, I could never trust it as a lending protocol because, the moment that you turn off the chain, I'm immediately exposed to possibly accruing bad debt. But yeah, no, layer zero, I mean, I love layer zero. Actually, I'm really a big fan of it. I think if they can connect it to all the supernets, whatever subnets, that would be incredible. I think CCIP is also doing something on that end. Um, but yeah, I don't think we have a clear winner there. I'm I really liked the Kusama and Dot parachain whole thing. The problem I see is just that I mean, this is maybe more of a marketing problem on their side, but they don't have as many users or much users at all. Um, but I would love for them to kind of keep building on that model. Um, yeah, no. The Cosmos SDK though is fantastic.
Do you think do you think that they'll like be a good place for both? Because I'm pretty bullish on things that are building on Cosmos, like, Kanto, Celestia, Saga. Are there any projects using the Cosmos SDK in particular that you're excited about?
Yeah, I really like Kanto, and we actually know some of them very closely. As well, some of our anonymous members of our team know them very, very well. So yeah, I'm excited for Kanto. I met them the other day. Actually, I was at ETH Denver, and you can just see the great community that they've built. Like there wasn't an event as packed as Kanto's. It was like sardines in there, and everyone was incredibly excited about it, even though things were going to the absolute doom. But yeah, no, great project.
I like their community. Um, reminds me of the Barachain folks as well. I am hella excited for Barachain, by the way. Um, and talking about Celestia, I find it pretty cool that they're one of the few protocols that are going to work within the interchain, and by interchain I mean like being like chain agnostic and having bridges to a lot of virtual machines. On the space that they held earlier this week, one of their guys, Nick, who worked on Harmony, he was talking about sovereign rollups on Bitcoin via Celestia's like data availability layer. So he was like proposing the thought of like building on top of Bitcoin's Omni layer chain smart contract. So eventually, like you'll be able to access like data availability layers on these rollups via native Bitcoin layer one, right? So it's like a lot of this technical stuff, and it's like basically the TLDR is within like the next 5 years, more like by the end of the decade. Given that the current dev speed for Bitcoin in this growth aspect is kind of slow, there's a possibility that you'll have like lending protocols and other stuff like that on Bitcoin, and you'll be able to access other ecosystems through the base layer of Bitcoin, right? And me and Payne were talking about DeFi and NFTs on Bitcoin months and months ago, and really like the first product that gave you an idea of what that might look like was Xenon Network, and it's always this group of like just a ton of anonymous devs and all that stuff, and they're only really active on Reddit. And now you have these other communities from Kanto and Bearchain and stuff like that, and they're exploring this like gigabrain multiverse of ideas.
I was pretty
And
impressed with ICP too, with like the Bitcoin with the, Bitcoin and DeFi. Like you can use native Bitcoin. We had them on the show. I was like, damn, that's gonna be pretty cool. That it's not even they basically built their own way to use the native Bitcoin network for lending.
yeah, and it
That's
Yeah, and then you also had Thorchain like on their swaps and stuff and on their pools. Yeah, it's all native Bitcoin as well.
Oh yeah, no, yeah. Thorchain, I was a big backer of it in the day. So I loved the whole concept, and also even their sister project Sif Chain, I was in there. Um, so yeah, no, I think the native kind of it's kind of like the relayer chain. That's what Thorchain is trying to be. I think that will I think that it's kind of the same scenario as it can be done on parachains. It can be done through something like Layer Zero, or any Cosmos SDK app could kind of build it, kind of like they've done through Thorchain. So I personally am leaning more towards like I think it's going to be a Cosmos chain that kind of wraps everything together and creates the native actual trading and lending.
Yeah, I think
Yeah.
the current sort of trifecta system that we have right now to facilitate all those things is Celestia. So you can think of Celestia as like the software within a computer, right? And then you have Fuel Labs with the execution layer on Ethereum, and then that goes into the interchain, and then you have Saga facilitating rollups as a service, and then their chainlet security model. So they're kind of like the protection layer on the software, and Fuel Labs. No, they're called Fuel Network now, and Fuel Network is sort of like the Google Chrome, right? Like the actual application within the software that can host a variety of services, right? Like your YouTubes and all that stuff, like your dApps, right? And then you have Dimension XYZ, which is like a whole nother topic, but I won't get into them. I don't really want to like talk about like gigabrain stuff where people don't understand it or whatever. But I'm trying to make like the analogy as smooth as possible, right? But similar to how like the last cycle we had like Uniswap, right, that created the innovation, and then we had um, things like Arbitrum come out later in the cycle, right? Like with DopeX, Vesta, things like that. These were all ideas back in 2018, early 2019, right? Like the Uniswap Labs grant was in the second half of 2018. And now we're seeing now on like the funding side, like the VC side of things, there's a lot of growth and innovation in these rounds that are being capped up. Like I know it may seem like the end of the world, but these rounds they're closing fast, right? And there's a lot of like network effect in these things where, as you said, right, like not many people know about Kanto, right? Like if you're just a Coinbase user, or if you literally just like trade Bitcoin and Ethereum on perps, like you're a perps trader, you won't really know the growth and innovation, and that's how you catch a lot of like upside probability, right? So if you believe that there's going to be innovation within the next few years, then you look at where a lot of that growth is, right? And that also includes things at conferences and stuff like that. And if you take a look at these speaker panels, these tickets are sold out immediately, to the point where it's like, if you want to get those last batch of tickets, you're going to have to apply, give your resume, you have to represent an entity. And so eventually, I ultimately believe that what we call Web3 or crypto is going to be shut off to the public as far as witnessing growth prospects, just like gaming was, right? Back in the 80s and like 90s, your average Joe was able to go to these E3 conferences, right? Where you buy your ticket, you can talk to the devs that easily. But now, you have to represent a gaming company. You have to have like a full resume to catch like these one-on-one presentations of the tech stacks that are being built out. So I'm a bit of an optimist, and when it comes to like the network effect and the growth metrics for Web3. So excited to be here and talk shop with you guys on a daily basis, man. It's really exciting to talk to devs and seeing their experience and things like that, because crypto's not going away anytime soon. It's here to stay.
Yeah, yeah, I 100% agree. And also, I think that the tech hasn't gotten worse, right? I mean, we've built great things. I can tell you, all of the big projects, we all speak, and we're all working on like incredibly innovative stuff inside of each of their respective fields, and we're not going away. And I would say that all of this downward momentum, I mean, if you really track it down, it's all really come down to centralized actors, right? I mean, this is all just contagion from one fund to another to a bank to, it's not crypto's fault, except for maybe Terra, but yeah.
Yeah, I'm kind of done talking about Terra, man. I that's gosh, dude. Like I heard the
Yeah,
other
change your
day.
Everyone knew,
doctrine now.
honestly.
Yeah,
Everyone knew,
but I heard the other day. Like I do like to have fun. I do like to have fun. So when anyone throws like some humorous takes on me, I like to laugh. And the other day someone was like, Wabi, bro, I go on your spaces, and the one thing that you always say is, man, Terra had the best UI. Man, Terra was like the Apple store of the ecosystem. Man, Terra. And it's like, dude, you're totally right, man. So
It's like a
sometimes it's good.
toxic ex-girlfriend for you.
Yeah, dude. Yeah, man.
hey,
So
you're not wrong though. It did have the best UI.
oh, hold on, bro. Hold on. Don't make me go down that rabbit hole again, brother. All right. All right, man. But that just goes to show, at least, like, there are some builders in the space, and I'm really excited for what products like Saga are gonna do. They're gonna be main eventing at the Game Developers Conference, and they're gonna show off their UIX. So kind of like what AVAX did. My bad, not AVAX, Avalanche, because like they don't call themselves AVAX, but Avalanche in late 2020, they had a presentation at a conference. I forgot which one it was called, but I believe it was like around November. And like they showed off their UI and all that stuff, and their incentive program and things like that. And I believe Suzu was on that panel as well. So this is the first time where an actual like Web3 company, or crypto company, if you want to call it that, is going to be having a keynote event at one of the largest tech conferences in the world. Like, we're talking about the Game Developers Conference here. We're not talking like, some bucket shop local event in Las Vegas or San Francisco, right? We're talking about the Game Developers Conference. And ultimately, like, what that serves to like your user on Fortnite or whatever, I'm not sure. It's up to anyone's guess, you know. But yeah, it's pretty cool seeing that, like, despite this being a bear market, you still see some similarities going on in previous bear markets, right? Like in 2018, a lot of like the products that were trying to build on DeFi, right? Like they were going to conferences, doing Reddit AMAs, YouTube AMAs, and they were all anon, right? And now we're kind of seeing the same thing, but on a mass scale. Like tickets are still being sold out at conferences, and there's still a lot of like growth aspect going on. And I guess you can say that for the general world, right? Like even during like the 2008 financial crisis, like there was still a lot of tech innovations going on. Like you had Sony and Microsoft just you know ramp up their scale and their business model for things like gaming. And that's how I see crypto, right? Like eventually I think it's going to have this parabolic growth, similar to the video game industry and what it experienced in the late 90s, right? But how that looks like, you know take a guess, right? But either way, I see we're hitting the 45-minute mark. So if anyone in the audience wants to come up, Vanton, Emergent, Doji, Tempest, Snorlax, Schizo, if you guys want to come up, feel free to come up and speak, ask any questions, give any statements. Otherwise, we'll just begin to wrap up here. So with that being said, we'll be back on Sunday. We'll be hosting Derivatives Monkey from ZK Casino and the Zigzag Exchange and a few of his guys this Sunday at 2 p.m. Eastern time or 3 p.m. Eastern time. So be sure to
I think it's
check that
3
out.
p.m. Eastern, but yeah, that'll be
Yeah,
fun.
yeah. Let me make sure. Okay, so yeah, we'll be hosting Derivatives Monkey. He is the head of Zigzag Labs and ZK Casino and Starlink VRF, and they're involved with things like on Starkware and things like that. And yeah, look forward to more builders from Arbitrum coming onto my spaces on a weekly basis, and eventually, what this looks like in the summertime, second half of this year, or just Arbitrum roundtable spaces. And inevitably, I'm thinking like an Optimism meets Arbitrum sort of spaces where there's a bunch of like devs and contributors all in one space, and yeah, get the good word out about all things crypto, Web3, NFTs, and all that good stuff. So yeah, you guys can catch this on our YouTube channel, things like that. If you're new to the space, feel free to follow us here, because Bitcoin, me and Payne, we those spaces on a weekly basis, and look forward to it. Thank you guys so much for coming on. God bless you all. I want to thank you, Tenzin, for coming on and chatting with
Yeah,
us
thank
and
you so
talking
much,
some shop.
Tencent.
Yeah, man. Look forward
Yeah,
to
absolutely. Thank you for having me.
No problem, man. Looking forward to having you on these roundtable spaces in the future. And yeah, thank you so much. And thank you so much to the audience for supporting us here because Bitcoin. I'll catch you on Sunday. Have a good night, guys. I'm going to go train legs.
Hell yeah, brother. Take care.
Good night. Good night, guys. Good night, Payne. Nice meeting you.
Good night. Nice to meet you, man.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.